put your phone or device aside and immerse yourself in this audio story. Perfect for listening on the move, while relaxing, or for bedtime listening. We release new stories daily, so make sure to like and subscribe to not miss out. This story is based on true events. The prophet who burned $100 billion. In a locked boardroom somewhere in Tokyo, a single man held the power to reshape the future of humanity. He controlled more capital than most nations. He whispered in the ears of the world's most ambitious entrepreneurs, promising them infinite resources to build their dreams. But there was a price that would cost thousands their jobs, burn through billions in wealth, and expose the darkest truth about the modern tech revolution. That behind the glossy promise of innovation lies a system built on delusion, desperation, and the willingness to gamble everything on a vision that may never come true. This is the story of Masayoshi Son, the Vision Fund, and the greatest wealth destruction in startup history. A real-life business thriller where the stakes were measured in billions, and the casualties were measured in shattered dreams. Masayoshi Son didn't become one of the world's most powerful investors by playing it safe. Born in poverty in rural Japan to Korean immigrant parents, he faced discrimination that would have broken most people. Instead, it forged something darker, an almost pathological need to prove the world wrong, to accumulate wealth and power on a scale that would make his critics choke on their words. By his 20s, he'd already made and lost his first fortune. By his 40s, he'd built SoftBank into a telecommunications empire. But his defining moment, the move that would cement his legacy, or destroy it, came in the year 2000. Son invested $20 million in a struggling Chinese startup that most Silicon Valley investors had passed on. The company was called Alibaba. That single investment would eventually be worth more than $100 billion, transforming Son from a successful businessman into a living legend, a prophet who could see the future, while others stumbled in darkness. The tech world whispered his name with reverence. Entrepreneurs begged for meetings. He became known as the man with the golden touch, the investor who didn't just bet on companies, he bet on civilization itself. But here's what the glossy profiles and fawning articles never mentioned. Masayoshi Son's success with Alibaba wasn't just good judgment. It was luck on a cosmic scale. And that luck was about to run out in the most spectacular fashion imaginable. In 2016, flush with the confidence of a man who believed he could predict the future, Son launched something unprecedented in the history of capitalism, the SoftBank Vision Fund. It wasn't just big, it was obscene. $100 billion, the largest technology investment fund ever created. To put that in perspective, that's more than the GDP of most countries, more than enough money to build entire cities, cure diseases, or reshape global infrastructure. Son's pitch was intoxicating. Invest in the companies building the future. Accelerate the arrival of artificial intelligence, robotics, and technology that would transform human civilization within 30 years. But where did this impossible sum of money come from? The largest check, $45 billion, came from Saudi Arabia's Public Investment Fund, controlled by Crown Prince Mohammed bin Salman. Another $15 billion came from Abu Dhabi's Mubadala Investment Company. Technology giants like Apple, Qualcomm, and Foxconn threw in billions more. SoftBank itself committed $28 billion. On paper, it was a coalition of the world's most powerful entities betting on the future. In reality, it was something far more troubling. A massive concentration of capital with virtually no oversight, controlled by one man's singular vision of tomorrow, backed by regimes with questionable human rights records who saw the fund as a way to diversify away from oil and project soft power through Silicon Valley. The money came with no real strings attached, no board to question Son's decisions, no mechanism to say no to the prophet who had picked Alibaba. And Son? He believed he was building the future. What he was actually building was the largest house of cards in startup history. The Vision Fund's strategy was simple, almost brutally so. Find companies with ambitious founders, give them more money than any rational investor would, overwhelm the competition, and dominate entire industries before traditional venture capitalists even understood what was happening. Son called it the cluster bomb approach, carpet bomb entire sectors with capital until you own the future. The investments came fast and furious. WeWork, the co-working company valued at $47 billion. Uber, the ride-sharing giant. DoorDash, delivering food. Compass, selling real estate. OYO, disrupting hotels. Katera, reinventing construction. Brandless, selling generic products. Fare, renting cars. Zoom Pizza, making pizza with robots. The checks were staggering. Not millions, billions. WeWork alone received nearly $20 billion from SoftBank and the Vision Fund. But here's where the thriller takes its first dark turn, where the unsettling truth begins to surface. The Vision Fund wasn't investing in great businesses. It was investing in growth at any cost, in founders who promised the impossible, in companies that were burning money faster than they could ever hope to make it. Traditional metrics like profit, sustainability, and sound business fundamentals were dismissed as old-world thinking. Son's team moved so fast that due diligence became a formality. Some investments were decided in meetings lasting less than an hour. One founder later revealed that Son calculated a valuation for their company on a napkin during their first meeting and wired billions within weeks. The flood of capital had a corrupting effect on Silicon Valley. Suddenly, entrepreneurs weren't building companies to solve problems or create value. They were building companies to attract Vision Fund money. Valuations became fantastical, untethered from reality. Companies that should have raised $50 million were getting $500 million. Founders who should have been questioned were being celebrated. The Vision Fund's money came with a hidden cost. It inflated an entire ecosystem, creating a bubble where perception mattered more than performance, where the ability to tell a compelling story about the future was worth more than actually building something sustainable. And at the center of this whirlwind sat Masayoshi Son, convinced he was creating the future, blind to the possibility that he might be destroying it. Then came the first crack in the vision, the moment when the fairy tale started to curdle into nightmare. His name was Adam Neumann, and he was everything Masayoshi Son wanted in a founder. Charismatic, ambitious, utterly convinced of his own messianic importance. Neumann ran WeWork, the co-working company that Son believed would revolutionize real estate itself. But behind the yoga studios and craft beer on tap, behind the rhetoric about elevating the world's consciousness, something rotten was growing. Neumann had used Vision Fund money to buy buildings and lease them back to WeWork at a profit. He'd trademarked the word "we" and sold it to his own company for millions. He'd taken out loans using his own WeWork stock as collateral, then used that money to buy more real estate to lease to WeWork. It was a circular scheme of self-dealing that would have made a con artist blush. But Son kept writing checks, even as warning signs multiplied, even as WeWork's losses accelerated to nearly $2 billion a year, even as insiders questioned Neumann's erratic behavior and questionable ethics. Why? Because Masayoshi Son had convinced himself that Neumann was the next Steve Jobs, and WeWork would be worth $10 trillion. Yes, trillion, within a decade. It was delusion on an epic scale, the kind of reality distortion that happens when you have infinite capital and zero accountability. In August 2019, WeWork filed to go public. The company's S-1 filing, the document that revealed its finances to the world, was a masterpiece of corporate dysfunction. Billions in losses, questionable corporate governance, a founder who controlled the company through special voting shares and seemed more interested in personal enrichment than building a sustainable business. The market took one look and recoiled in horror. WeWork's valuation, which SoftBank had pegged at $47 billion just months earlier, collapsed. The IPO was pulled. Neumann was forced out, receiving a controversial $1.7 billion golden parachute, while thousands of WeWork employees faced layoffs. SoftBank had to mount a humiliating rescue, pumping in billions more to keep WeWork alive. The Vision Fund's stake in WeWork, once valued at nearly $20 billion, was suddenly worth a fraction of that. But this was just the beginning of the unraveling. WeWork wasn't an anomaly. It was a symptom of a deeper sickness infecting the entire Vision Fund portfolio. Across Silicon Valley and around the world, Vision Fund portfolio companies were starting to implode. Brandless, the generic products company, shut down after burning through hundreds of millions. Fare, the car subscription service, collapsed. Zumi Pizza, the robot pizza maker, shut its operations after $445 million in funding. Catera, the construction technology company that received nearly $2 billion from SoftBank, filed for bankruptcy. Greensill Capital, the supply chain finance company, imploded in a fraud scandal. Wirecard, the German payments processor that the Vision Fund invested in, was exposed as a massive fraud. $2 billion in cash that simply didn't exist. Each failure followed the same pattern. Massive funding, explosive growth, questionable fundamentals, and eventual collapse. The Vision Fund had created what some insiders called a valuation markup game. Here's how it worked, and this is where the real darkness emerges. SoftBank would invest in a company at an absurd valuation. That high valuation would be used to mark up the Vision Fund's overall returns, making it look successful on paper. Those paper returns would be used to raise more money, invest in more companies at even higher valuations, creating a perpetual motion machine of inflated worth. But it was all built on sand. The valuations weren't real. They were fantasies, sustained only by the willingness of SoftBank to keep writing checks at prices no rational investor would pay. The moment that money stopped flowing, the entire structure would collapse. And in 2020, the money stopped flowing. The COVID-19 pandemic exposed just how fragile the Vision Fund's portfolio really was. Companies that looked unstoppable in 2019 suddenly faced existential threats. OYO, the hotel chain, saw bookings evaporate overnight. Uber and other ride-sharing companies watched demand crater. The Vision Fund, which had reported paper gains of nearly $50 billion in 2020, suddenly reported a loss of $17.7 billion in a single quarter, one of the largest quarterly losses in investment history. Masayoshi Son, the prophet who had promised to reshape civilization, was now sitting atop a smoldering wreckage of destroyed capital. But here's what makes this a true business thriller. Even as his fund burned billions, even as his investors questioned his judgment, even as his own company's stock price collapsed, Son kept believing, kept investing, kept insisting that the vision was sound, that the failures were temporary, that history would vindicate him. But there was a secret that Masayoshi Son didn't want anyone to know, a financial maneuver so desperate and dangerous that it threatened to bring down not just the Vision Fund, but SoftBank itself. To understand it, you need to understand something crucial about the Vision Fund's structure. Son had personally guaranteed much of SoftBank's investment. He had borrowed against his own SoftBank shares to fund his portion of the Vision Fund. As the fund's value collapsed, Son faced a nightmarish scenario. Margin calls that could force him to sell his shares, potentially losing control of the empire he'd spent his life building. In March 2020, with the market in free fall and the Vision Fund hemorrhaging value, Masayoshi Son made a move that stunned even his closest advisors. He announced that SoftBank would buy back $41 billion of its own stock and sell off assets to raise cash. But that wasn't the shocking part. The shocking part was what he did with some of that cash. Son created a personal trading operation inside SoftBank, buying billions in call options on tech stocks, not through the Vision Fund, not through a traditional investment arm, through a division called SoftBank Asset Management, controlled personally by Son himself. At one point, SoftBank owned nearly $30 billion in options positions, making it one of the largest individual buyers of tech stock call options in the market. Some analysts believed SoftBank's massive options buying had actually helped fuel the tech stock rally in late 2020. In other words, Masayoshi Son, facing the collapse of his investment fund, had essentially turned SoftBank into a hedge fund, making massive, highly leveraged bets on the very sector where his previous bets had failed spectacularly. It was a move of breathtaking desperation, the financial equivalent of doubling down at the casino after losing your house. And for a moment, it worked. Tech stocks rallied. SoftBank made billions on its options trades. Son looked like a genius again. But the underlying problems remained unchanged. The Vision Fund's portfolio was still troubled. The valuations were still inflated. The business models were still questionable. Son had simply traded one form of risk for another, swapping long-term venture investments for short-term market gambling. And his investors, particularly the Saudis and the investors from Abu Dhabi, were growing restless. Here's where the story reveals its final layer of darkness, the human cost of the Vision Fund's failure. While Masayoshi Son remained a billionaire, while SoftBank executives kept their positions and compensation, the people who paid the real price were the thousands of employees at Vision Fund portfolio companies. When WeWork collapsed, 2,400 people lost their jobs. When Catera filed for bankruptcy, thousands more were laid off. When Brandless shut down, when Fare imploded, when Zumi Pizza closed, real people, not billionaires playing with house money, but ordinary workers, saw their livelihoods evaporate. They'd been promised they were building the future. They'd been told they were part of something revolutionary. Instead, they were pawns in a high-stakes game played by people who could afford to lose. The Vision Fund also warped Silicon Valley's culture in ways that will take years to repair. It taught a generation of entrepreneurs that storytelling mattered more than execution, that you could raise infinite capital without ever proving your business model, that growth at any cost was the only metric that mattered. It created a generation of unicorn companies, startups valued at over $1 billion, that existed not because they'd built sustainable businesses, but because they'd convinced SoftBank to invest at absurd valuations. When the Vision Fund imploded, it took that entire ecosystem with it. Suddenly, investors demanded profitability. Suddenly, business fundamentals mattered again. Suddenly, the party was over. By 2022, the damage was staggering. The Vision Fund had invested roughly $100 billion. Its portfolio had lost tens of billions in value. SoftBank's own stock price had collapsed by more than 50% from its peak. The company announced it would slow down investments, focus on profitability, exercise more discipline. All the things it should have done from the beginning. Son publicly apologized to shareholders, admitting the fund had made excesses in its investments. But apologies don't bring back lost billions. They don't restore the jobs. They don't undo the cultural damage. The Saudi Public Investment Fund, which had committed $45 billion to the Vision Fund, found itself down billions on its investment, though the exact losses remained shrouded in secrecy. The Abu Dhabi Sovereign Wealth Fund faced similar losses. Plans for a Vision Fund 2, which had been announced with great fanfare, struggled to attract new investors. Who wanted to give more money to a fund that had just incinerated tens of billions? The Vision Fund's failure became a case study in everything wrong with modern capitalism. Too much money chasing too few good ideas, investors with more capital than judgment, founders rewarded for storytelling rather than building, and a complete disconnection between the people making decisions and the people bearing the consequences. But perhaps the darkest lesson of the Vision Fund is what it reveals about how wealth and power actually work in the modern economy. Masayoshi Son didn't face criminal charges. He didn't lose his position. He remained a billionaire, respected in many circles, still given platforms to share his vision of the future. The system protected him, even as it punished the workers and small investors who believed in the companies he funded. That's the real scandal. Not that the Vision Fund failed, but that the people responsible for its failure faced almost no consequences, while the people who had no say in its strategy paid the price. Today, Masayoshi Son talks about artificial intelligence, about the singularity, about how AGI, artificial general intelligence, will transform humanity within years. He's launched new investment initiatives, made new bold predictions, promised new revolutions. Some of the Vision Fund's investments, like DoorDash and Uber, have survived and even thrived. Others remain trapped in valuation purgatory, worth far less than what the Vision Fund paid, but still operating, sustained by the hope that someday the vision might be vindicated. But the wreckage remains. Billions destroyed, lives disrupted, an entire ecosystem warped by too much capital and too little wisdom. The Vision Fund was supposed to accelerate the future. Instead, it became a cautionary tale about what happens when vision becomes delusion, when confidence becomes hubris, when the promise of tomorrow is used to justify the destruction of today. It revealed an uncomfortable truth about modern capitalism, that the system is designed to protect those at the top, to allow them to gamble with other people's money, other people's livelihoods, other people's futures, and walk away unscathed when those bets inevitably fail. Masayoshi Son once said his goal was to make people happy, to create companies that would improve billions of lives, to build a future worth living in. But the true legacy of the Vision Fund isn't happiness or progress. It's a reminder that unchecked ambition, unlimited capital, and the absence of accountability create not innovation, but destruction, that the line between visionary and con artist often depends less on intention than on outcome, that when billionaires play games with billions, it's never the billionaires who lose. In that locked boardroom in Tokyo where this story began, Masayoshi Son still sits, still dreams, still believes he can see the future more clearly than anyone else. But the future he promised never arrived. The companies he funded collapsed or struggled. The revolution he predicted never came. What did arrive was something else entirely. A reckoning with the reality that vision without discipline is just expensive fantasy. That believing you can predict tomorrow doesn't mean you can. And that the greatest danger in business isn't the risk of failure. It's the certainty of success without ever being tested by reality. The $100 billion vision burned, and in its ashes, we can see the true cost of believing that money alone can build the future, that confidence can substitute for competence, and that those who gamble with billions will ever truly pay when the house of cards inevitably falls. This is the dark side of business. This is what happens when vision becomes delusion. And the truly chilling part, somewhere, right now, another fund is being raised. Another visionary is promising to reshape civilization. Another $100 billion is looking for a place to go. The only question is, who will be left holding the bag when this one burns? Subscribe and listen to our next story below.